Hi everyone, I hope you're doing okay. Last session we said that we're going to talk about two of the tools about the Fibonacci family, and we also have a Gann tool. We're going to talk about these now, and after that we're going to talk about more important points about the pivots. You see, usually the pivots are taught a little bit further in your teachings, but because they're very useful and you don't know about the pivots tool yet, I have to teach it to you so that you will learn all of these better. So the first tool is the Fibonacci fan that is used in both short and long-term trends. And it's exactly like the Fibonacci resistance, and you draw it from high to low or low to high. Let's move on to this chart, which is euro pound, and I have two swing highs and two swing lows here. So if I want to draw the Fibonacci uh, in this decline and downtrend, we have to look for a swing high that the main decline has started from. For example, this swing high, you see the decline has started from here. You've had a decline there, but a correction has happened here and the decline has started from there again. So I can consider this as a swing high and I can connect it to my swing low. You have three Fibonacci resistances, 38, 50, and 61 level. And if your 38 level is broken, you can take a buy order up until the 50 level. And after that, if it's not broken, you can do a sell order and close it at your 38 level. When the price retraces to our 38, we can do another buy order, and because it has broken the 50 level once, you have to expect it to break the 50 level in its second collision, and you're going to get your final profit in your 61 level, because in here I had a candlestick that is close to my 38 level, and then after that it has had a small decline, and after that it's broken again. So that was about the downtrend. We can use it in an uptrend as well. I'm going to choose a chart here, so you can see that it's not different at all. So this is the point that I consider. I can connect the swing low to my swing highs, where I've had a decline. So if you connect it to this, that will work out. But because you have another swing high there, you have to consider the next one. So I'm going to start from the beginning. Imagine we don't have this part of the chart. So the price is exactly above our 38 level, and it's not giving us any signals. When the 38 is broken, we can take a sell order, and when it reaches the 50 level, we have to close it. And if the 50 level is not broken, we can do a buy order again and close it at our 38 level. So now that it's above 38, we're not allowed to trade here, and we have to wait for it to come below the 38 level. Then we can sell and close it at our 50 level. And if the 50 level is broken again, we have to close the order when it reaches the 61 level. And you can see that it was performed very well here. And you see the swing high that is there in the market. But I told you, don't expect the price to exactly touch the resistance. But in our previous swing high, it has worked out a lot better. The decline that we've had here, you could have used your Fibonacci resistance. That would have been more precise. Our in our 23 level, we had to sell. We had to close it at our 38 level. Then it would retrace to 23 level, and we would probably have a breakout in our second collision. And after that, it's going to go back and forth like that to reach the 61 level eventually. You can draw it in your overall trend. This is the bottom of the chart, and this is the top of the chart. When the 38 level is broken, we can sell up until 50, and after that it's going to have a retracement up until the 38 level, and after that it can have another retracement to our 50 level. So and here when the 50 level is broken, and it has had fluctuations on our 50 level, that is how we can understand that we've had a very powerful pivot here with a lot of resistance. But we're going to talk about pivots after we're done with the tools, because the reason why I'm teaching you the pivots right now, because as you know, some people teach the pivots at the end of their teachings, but you see 80 or 90% of the market is predicted based on pivots. So I have to teach this to you sooner so that you can understand the other strategies better. So if you learn about the pivots, you'll know why the price has retraced here and why didn't it reach the 61 level. So that was about the overall trend, and you can do it in your longer time frames as well. You can do it from high to low, and you can see that it has worked out very well. It was performed, and you could have taken an order based on this. Let's move on to the Gann fan. And this tool is drawn from low to high, from your swing low to your swing high, and it has 3 rules that you have to comply with. And if those 3 rules are there, it will work out and it will perform. So I emphasize on this again. Every tool that analyzes the market can be used in a specific location in the market. You can't use all of the tools in all of the locations. So hopefully when we go further, you will get more professional and you can identify what tool to use in every situation. So I'm going to move to a chart that has more fluctuations. So in here, you have to draw your Gann from the lowest part of the chart at the bottom. So I'm going to consider this. You may ask, why am I considering this and not the past of the market? Because this point is in the same row with the past of the market. The price is having fluctuations in the same spot. So I'm not going to consider points that are behind this, because that will be too far away. I'm going to consider this point, and I'm going to connect it to my last candlestick. And on this straight line here, I can activate a line, and you can see the 2 dots here that are activated. I can drag it and move it higher. You see, this Gann tool has some advantages and some points. You can't use the Gann fan in every location of the chart that you want. The lower line is your fifth line. I have activated it from the bottom, and the center is my swing low, and where it has had a decline, a correction, you can see that here. So I will put my fifth line where we've had a correction, and a downward correction. So that is about your uptrend. And the downtrend is exactly the opposite. So right now we're talking about the uptrend. The center is the lowest swing low. The next swing low is exactly like the trend line. We connect them together like that. So we don't need these four lines. They are for the past. But we're going to consider these five lines that we have that are for the future. Let me adjust it. So in the past, the price was having fluctuations between our fifth and sixth line. But right now, we're not going to analyze the trend based on the Gann fan until the price reaches our fifth line. We're in our USD/JPY chart right now, and when this line here is broken, it means that if the price is broken here, it means that if the price declines and 50% of the candlestick is completed below this line, or the second candlestick is completed outside of this fifth line, when that happens, I should expect the trend to turn into a downtrend, and I should expect it to reach our fourth line. So I can do a sell order here and close it in this area. And again, when our fourth line is broken, we can start selling again, and we have to close it in this area. And if our fourth line is not broken, we can take a buy order, and based on the Fibonacci resistance, we can gain our profits and exit. Why did I tell you should use the Fibonacci resistance? Because based on the Gann, you can't understand where to exit. So that is the same about our third, second, and first line. When the first line is touched, it means that it is the 80% possibility that that is the end of your trend, and after that you're going to have an uptrend. So that was about the Gann fan. About the downtrend, you can also use this, and you have to consider the swing low at the top of the market. Imagine we've had this part of the market only, and I have activated my fifth line. I connected to the swing high like the trend line. But one point is that you can't connect it to this swing high here, because I told you we only have this part of the chart. When we only have this part of the chart, when I connect it to this swing high, you see I connected to this, excuse me, imagine we have only this part of the chart. Yes, only this part. I get confused by it. Yes, excuse me. So the next swing high at the top, we connected to that, and we have to analyze this part of the chart. We don't need the previous lines. When the fifth line is broken, I can do a buy trade. I told you that the 50% of the candlestick should be completed outside of the line, or the second candlestick has to be completed outside of the line. So I could have started buying here and continue buying up until the fourth line. And when that doesn't break, I can continue buying based on the Fibonacci resistance and I can gain the profits. But in here, the price has broken this line. So we could have taken another buy order here and close it at our second line. You see, we could have taken a buy order in our second line and close it there. So in here we've had a decline and the next candlestick was also completed downward, but the previous candlestick, the next candlestick that is completed, it has engulfed the previous one and then it's inside the channel again. So the swing high that we have here and the price that is inside this channel, I told you that based on the Fibonacci resistance you have to analyze it. And as you can see, the price has retraced on our 38 level. It wasn't able to break the 38 level and it has gone up again. And it's above our 23 level right now. So always analyze the retracements based on the Fibonacci resistance. But based on the Gann fan, you'll know where to enter. You see where the second line here is broken. You could have started buying and you could have put your stop loss. Let me delete these for you. For example, I'm going to take a buy order here and I will put my stop loss exactly below the line here. Now that I have bought here, it has had fluctuations there because we've had a very powerful pivot. The price wasn't able to go further than that, so I started gaining profits up until the first line. And the retracements, you could have gained your profits based on the Fibonacci resistance on your 50 or 61 level. It's on our 50 level, so we'll close it. Why on 50? Because we told you when we have an uptrend and we drive an opposite Fibonacci, you have to expect a retracement on our 50 level, not our 61 level. And so we would have closed the order here, and when the first line is broken again, this Gann is not reliable anymore. And we have to update it and draw a new one, which would be the next swing high here. And it's exactly, you see, you can do a sell order when your fifth line here is touched. So when the price is between the fifth and sixth line and channel, you have to expect the price to be an uptrend. So that was about the Gann fan. It's a very good tool, although we have to talk about the Gann fan further. It's one of the astrology methods, but I have taught you the simplest way possible to use the Gann technique, and based on this tool you'll know when to enter, and you can determine the retracement points based on your Fibonacci resistance. So there is another tool, it's called Fibonacci expansion. This Fibonacci is drawn the opposite of the other Fibonacci's, because if you have an uptrend, a trend that is going up, you have to connect your swing low to the point where we've had a retracement. It means the swing high that is at the bottom. So you have to connect those two together. Although we have to have a more obvious retracement where the 23 level has been broken. You see, the 23 level has not been broken here. So I can't use my Fibonacci expansion here. So I'm going to draw the Fibonacci resistance first Yes, this is our 23 level and the retracement there. So let's move on to the Fibonacci expansion. We're going to connect the swing high to the retracement point. As you can see, this red line here, it has to be like a V shape or a reversed V shape. So I have connected the swing high at the top to our next swing high, and you have three resistances: 61, 100, and 161. So when the price is below my 106, my 61 level, you shouldn't buy. You can sell at the top, and when it reaches our 100 level, you can exit. And when the 100 level is broken, we can gain the profits at our 161 level. And you can then take another order and close it. And you can see that before the price has reached this line, it has retraced. So if I want to consider the fractals, we can see that it was performed, but based on if you want to draw this accurately, it's exactly at the tip of the shadow. A lot of people connect the fractals together and they put a little bit of distance between them so they can understand the exact entry and exit points. You see, when I'm drawing it, this top part of the chart is not accurate. The best way to draw this is to connect the shadows together. On your 100 level, you have to buy and then close again. That is what you can do. You see, this candlestick is completed outside of the line here, and I told you when your 61 level is broken, your tool is not reliable anymore. So I'm going to use the Fibonacci resistance. This is in our 61 level, it has retraced, and I could have gained a lot of profits here. When you're done with your tool, you have to delete it and draw a new one. I connect the swing low to our swing high. So if I have this part of the market, I see that I could have gained a lot of profits in here. And this is the part where we have had a breakout. So if I want to predict the next part, I have to connect the swing high to our next point. So as you can see, this is our 61 level. So I'm going to consider this part of the chart as the starting point. I should have sold here and closed it at our 61 level, but the breakout has not happened because I told you that the second candlestick has to be completed outside of the line. So in here, when the candlestick is inside the channel again, I could have started buying and close it when it reached my 100 level. And if the 100 level was broken, I could have done a buy trade and close it at my 61 level. So this is a good tool, but it can be used in your Elliott waves. If you want to determine your next Elliott waves, you can use this. So I suggest you not to use this in your when you have a normal trend. If you want to determine the patterns that we're going to talk about in the future, you can use this tool. Okay, so I'm not going to talk about the Fibonacci time zone because it's not very useful and it has a lot of errors, so I'm not going to talk about this. Gann line is not useful either. I'm going to remove the ones that we talked about. Okay, let's move on to the pivots. a subject that is very important. I'm using this technique constantly, and I suggest you to always consider the pivots. What does pivot means? Where the price is closed and the future price is not able to go further than that point and it retraces again, that is called pivot point, where we have resistances, where we have swing highs. Let me add this one as well. So your swing high is like that, and here, and then here, and also in this area, and so on. I've had another one here, and this one at the end of the market, and one here, and also one here. Alright, so the points that I have highlighted it for you, they're called pivots. They're resistances, and the price is not able to go further than them at the moment. I'm going to locate them and highlight them with our horizontal lines, like this. One here, and here. So the red lines that I have identified are your pivots. For example, if the price is declining and it reaches these pivots, it's close to my pivots that I have highlighted with a line, it's going to retrace and go up. It means that when I'm at the 121.75, after that I'm going to have an upward movement. Or for example, I analyze it and I know that the price at this point, if this pivot is broken here, I'm going to have an upward movement up until the next pivot. Let's go backwards in the market. I'm going to highlight the pivots for you more precisely. So for example, in here we have pivots. We have pivots here as well. And I will locate the exact points for you. I pushed backwards in the market so that you can see the past of the market in a longer time frame, so you can understand how to locate your pivots completely. Alright, so for example, imagine we don't have this part of the chart. If I analyze the chart and I see that we're at the bottom of the market and we have a swing high here, I'm going to draw the Fibonacci, and as you can see, the Fibonacci lines exactly overlap the pivots that I have highlighted. You see the 38 overlaps these pivots, 50 level and 61 levels also overlap some pivots. If I want to draw it more accurately, it would be like this. I'm going to delete the Fibonacci. Okay, so imagine we only have this part of the chart. If I take a buy order here, I have to know that how long this buy order is going to continue and when it's going to retrace. I'm going to look at the past of the market to see where we have swing highs, where we have fractals, and where we have a candlestick with a long shadow. You see long shadows like this one and this one. I'm talking about, excuse me, swing highs or long shadows. Or for example, in here, we've had a long shadow and a swing high. It's higher than its two sides. This one is also like that. It doesn't have a shadow, that's correct, but it's considered as a swing high. This one is also higher than the two sides of it. This has a long shadow here. So this is considered as a pivot. This is a swing high. It's higher than the two sides of it. So these are not swing highs. Also this one, this is a swing high. These are not our swing highs because we can consider a point a swing high where in two sides of it's empty. So as you can see, we have kind of a swing low here. Next to our swing high here, we've had kind of a reverse V shape, a swing low. For example, in here as well, we have a V shape there. We have a reverse V shape right there. So if the price wants to go up, and when it touches these pivots, it's going to retrace. And I'm repeating this. The reason why it hasn't retraced here is because, as you can see, it has declined a bit, and after that it has been broken. So we'll find out that the pivot was weak, and that is why it wasn't able to stop the price. This is very important. The number of the pivots, in a way, the more powerful the resistance, and there is a less possibility of a breakout. So wherever you see that you have 2 or 3 pivots in a row, that means that the pivot is very powerful. So this is one of our pivots. It has caused a breakout, then it has gone up, and it's trying to reach the next pivot. The next pivot was powerful too, but these are usually because of the news that are published, the monthly news that are published, and the pivots are constantly broken. So the next pivot has stopped the price here. We've had a kind of a candlestick base here. It means that several candlesticks are completed next to each other. As you can see, the price wasn't able to go further than this. It has declined and it has reached the previous pivot, and it wasn't able to break this point as well, and then it has gone up. We have two types of pivots. One of them is called resistances and the other one is called the supports. Excuse me. We have resistances and we have supports. Which ones are called supports? When the resistance here is broken, that is called a support. It means that it's going to send the price upwards. But if the price is going up, it means that it's called a resistance. It means that it's going to send the price downwards. Another point about the pivots is that why do we say, excuse me, when the price is going up, and in the past we've had a downtrend and right now we have an uptrend, which pivots do we consider? The pivots that you see, the fractals are downward. This is very, very important. Please take notes. When we've had a downtrend in the past and right now we have an uptrend, the price is going up, we have to consider the swing highs that have downward fractals. We don't consider the swing highs that have upward fractals because they're going to help the price go higher, not lower. So that is what a resistance is. So exactly in here, if we're going to have a decline, the pivots that we're going to consider and our main pivots are the swing highs that have an upward fractal. It means that the support and resistances are going to be exchanged. You see, for example, in here, I don't have any downward fractals here. But when the price has retraced here, know that in the past, we've had a swing high with a downward fractal that has caused these resistance retracements. So we definitely have had a downward fractal in the past that has stopped the price. I'm going to show you other examples and other charts so you can understand them better. For example, in here, yes, exactly here. In here, when the price has gone up and then it has declined, it has touched this resistance, this swing high, and then it has gone up again. I want to show a better example for you. So we've had swing highs here. Here. Alright, so from here, the price has started an upward movement. You see the price has started to go up here. It has broken my first pivot, it has gone up and it has retraced when it has reached the body of the candlestick. Right here, exactly right here. In a lot of pivots, the price goes further than the shadow and it retraces when it reaches the body of the candlestick. So seeing here, the price is going up and it has declined here. The price was stuck here and stopped, and the next candlestick has gone up again, and then it has gone up severely and it has reached this pivot. And after that, we're going to have a retracement as well. We've definitely have had a pivot in the past that has caused this retracement. Let me move on to a clearer chart. Let's move on to a longer time frame. Yeah, this is a good chart for us. So we have pivots here. I'm going to locate the pivots first. Although these are our swing low pivots and are very important. These are your most powerful pivots. I'm going to talk about them. One here. Alright, so for now I try to only locate the pivots that are used in our uptrend. We're going to talk further about pivots our next session. Right now we're only going to locate the pivots for our uptrend. So I'm going to locate them with a line as well. Like that. So we have an uptrend here in this chart. So I'm going to start and consider every single one of these pivots. It means that when the price is going up, where are we going to have retracements? You see, for example, in here, the price has retraced from here because in the past we've had a pivot. But right now, we're only going to locate the pivots in our uptrend, so you don't mix them up together. But in here, the pivot has been broken. When a pivot is broken, you can start buying safely up until the next pivot. So I could have started a buy trade here. Let me zoom in. So I could have taken a buy order up until the next pivot, which is in this area. And this is also a pivot, but this is our main one. So in here, the price has retraced and it has declined and it has reached the previous pivot again. So again, the retracement of this one could be the next pivot. So when it retraces, it means that it's going to reach the next pivot, but only on the circumstance that this pivot is broken. And this breakout is going to happen when, at least when you're in your 4-hour time frame, at least it goes further than this pivot for 20 or 30 pips. It means that the body of the candlestick is higher than that. So when the pivot is broken, I could have started buying again safely and continue it up until the next pivot. As you can see, it has reached the next pivot and it has caused a decline. So if this pivot is broken, it's going to continue its movement up until this area. After that, it's going to have another decline. But if it's broken, we can take another buy order up until the next pivot. Right here. So I can take another buy order up until here. And if this wall, this area is broken, I can take another buy order up until the next pivot, right here. And as you can see, in the past, the price has reached this area and then it has declined. So this price has reached this pivot again and it has caused a decline. And as you can see, it was open from the bottom, but the price wasn't able to go further than this pivot. And again, okay, so I'm going to show you other examples in another chart so you can understand it better. I'm going to find a chart that has had a lot of fluctuations. We have one pivot here, another one here. You see, I told you, if we have an uptrend, you have to consider the fractals that are downward. You have one resistance here, another one here. Okay, so when the price has gone up, you see that we have two powerful pivots in one row. And as you can see, it has caused a severe decline here. And after that, when it has gone up again, it, it has broken these pivots, because if the in its first collision, if the price is not able to break the pivot, in its second collision, you're going to expect it to break it, because it makes it weaker. So then it has gone up again, and it has retraced when it has reached this pivot. And after that, when it's going up again, we're going to consider this pivot, which is going to be a retracement point for us. So that was about the pivots in our uptrends. I'm going to, you see, if I take a buy order here and I have an uptrend, which is the case here, I have a complete uptrend, so I have to consider that the price is going to retrace when it reaches the pivots that I have located. And when these pivots are broken, I can take a buy order and I can put my stop loss below the pivot, and I can put my take profit where my next pivot is. And when it's broken again, I can take another buy order and put my stop loss below the pivot and go on like that. It's very important. Please take notes. There are rules about the pivots. When a price reaches a pivot for the first time, there's 90% possibility that it's going to retrace. When it reaches the pivot for the second time, there's a 50% possibility that it's going to retrace. But in its third collision, there's a high possibility that it's going to break it. If it doesn't, you see, for example, in here, the price has had many fluctuations when it has reached that pivot. After that, it will decline severely. You're going to have a downward spike. You see, I've had pivots here. This is my first, second, third collision, which is in this area. And after that, you can see that we've had a decline. So if in its third collision the pivot is not broken, you can expect a severe decline. So I will repeat it for you. The first collision is 90% possibility of retracement. The second collision, there's a 50% possibility of retracement. And your third collision, there's a 30% possibility of a retracement. And most of the time, in this third collision, the price is going to break this pivot. Another important point about the pivots that you have to write down is that if you have drawn your Fibonacci accurately, I haven't located the pivots in here though, but I want to locate the pivots in this area. I'm going to move on to a longer time frame. I have one pivot here. My main pivots are here. I have two pivots here. I'm going to highlight it. So if you have located your pivots correctly, your Fibonacci levels have to overlap the pivots. You should be very precise and careful when you're locating the pivots. And sometimes even I myself make mistakes. For example, in here I didn't see the pivot that I had. So the 23 level overlaps this pivot, 38 as well, 50 level as well. So you see we've had a pivot here as well. The 61 level is the same. They all overlap some pivots. So if you have located your pivots correctly, your Fibonacci levels have to overlap the pivots. You see, the Fibonacci tool is a tool that will locate your pivots for you. It's what it does. It locates the pivots for you, and based on that, you can determine your take profit and stop loss. Or if I put it better, if you want to see if you have any problems in drawing the Fibonacci, if you have located the pivots correctly, if your Fibonacci levels overlap those pivots, it means that the Fibonacci is drawn accurately. But if it doesn't, it means that your Fibonacci is inaccurate. So that was the pivots that we have located in our uptrend. I'm going to find another chart to show you more examples. Okay, so I'm going to repeat this because the pivots are very important. So I have pivots here. I'm not going to locate the ones that are too far back. So I have located the pivots, and you can know what's going to happen in your price. So how long should we go back in the chart? If you're in your daily time frame, you have to look at the past of the market. So I'm going to locate the pivots here. If I consider this as a pivot, it's better. This one was completed after the market was closed. So I'm just going to look at the main ones. And we have another one here. So I want to draw my Fibonacci to see if it's accurate or not. Another point that I forgot to tell you, these are very important points, write them down. How do we locate the pivots? Um, so the 23 level overlaps the pivots. Fibonacci has a little bit of errors. All of these tools have a bit of errors, but the 30, 38, 50, level are okay, they overlap pivots. Our 61 level overlaps the pivot as well. So I have located the pivots correctly and my Fibonacci is accurate. Another points about the pivot, which is very important, is that a pivot is powerful when a price is going up, it retraces before it even reaches the pivot. So it means that the price shouldn't touch that pivot. When it touches the pivot, know that in the future that pivot is going to be broken very easily. You see in here, the price has reached this pivot, has touched it, and in the future a breakout has happened. So a pivot is powerful when the price, before it reaches the pivot, it touches the pivot, it retraces. When the price is not able to even touch the tip of the pivot, know that you're going to have a severe decline and the possibility of a breakout is low. Okay, so I hope that you have learned the resistance pivots well. The pivots that we talked about today are called resistance pivots, which are located in our uptrends. Please, please rewatch this video many times and practice in your demo accounts. Locate the pivots in the past of the market and trade based on them to see how well they're performed and they work out. We're going to use these pivots until the last session of our lessons, and I myself use these pivots all the time. So if you have any questions or problems, please ask, leave a comment on the website and I will answer. And also the Telegram channel's ID is on the website. We have groups with members who are students. You can ask your questions there as well. Okay, so good luck and have a good day.